It's the first big ticket item in Greece's privatisation programme, the profitable gambling firm OPAP. But without a last-minute deal today, the sale could collapse. We get a status update from Facebook. The world's largest social network will reveal how profitable it is and how it's squeezing more money out of its users on the move. Hello and welcome you with World Business Report. I'm Sally Bundock. Also in the programme, more evidence to show China's manufacturing sector is slowing down. We'll have the latest from our team in Singapore. But first, privatisation is key to Greece getting back on its financial feet. But the sale of the profitable gambling firm OPAP, that's the first big ticket item on offer, has been riddled with problems. Investors from the only suitor for OPAP have been meeting to discuss an improved 11th hour offer. Athens has given czech-greek investment firm Emma Delta until 11 o'clock GMT today to increase its bid of €622 million. That's around $815 million. For that price, the buyer gets a 33% stake in Greece's most profitable firm. And for the Greek government, the sale marks the start of its all-important privatisation programme. With the economy in its 6th year of recession, Greece needs to wrap up the sale to show it's finally making good on long-promised efforts to sell off state assets and cut its debts, as demanded under its international bailout. Well, with me is Kathleen Brooks, Research Director at Forex.com. Nice to see you, Kathleen. First of all, why were there not many bidders for this company? Because it is profitable, it is a lottery company, which are often seen as cash cows. What's going on?
Well, I think there's a couple of reasons. The first is actually a tax on gaming companies' profits, which has been whacked up to about 30% recently by the Greek government. So I think that certainly has put people off, because it's not like tax increases are going away anytime soon in Greece. Now, there was another bidder, which was an American company, but actually they were put off by the fact that they wanted a few conditions attached to the purchase of OPAP, and the Greek government wouldn't allow them. So there's been a couple of things that have made it slightly less attractive than it looks on paper.
And today we'll find out if they succeed or not. It's very important for the government that this does not fail, because symbolically that's a problem for Greece. But in terms of the privatisation programme led by this agency in charge, how is it going in general?
Well, I mean, the fact that it's been in place since 2011 and it's meant to finish up really in 2015, the fact that we're halfway through and we've only just getting a sale, and we may not even get a sale, suggests that this has kind of been what we've been used to with Greece, that things happen at the last minute, that, you know, there's a lot of kind of promises that are made to the Troika, to the European officials, to raise their own cash domestically, and that they just haven't done it. So it's definitely not on track, and I would say that if they expect to raise a lot of money through privatisation by 2015, they're going to have to extend that deadline a long way.
And in the meantime, how is Greece doing? Because if they don't succeed in the sales of what are, for some assets, are quite key and attractive assets to foreign buyers, they're going to get in trouble again financially. Is that the case? Well,
they will. It will make it harder actually to get their next tranche of bailout funds. So that's why they need to sell these state assets to get hold of future finances. Otherwise, they will be declared bankrupt, basically.
All right, Kathleen, thank you very much indeed. And of course, we'll keep across that story. The deadline, as I mentioned, 11 o'clock GMT today. So the clock is ticking. But let's now move on, because with over 1 billion users worldwide, there is no doubt it is the #1 social media company in terms of user numbers. Facebook will be giving us its status update later, when it reveals how much money it's made in the first 3 months of this year. All eyes will be on its mobile advertising business, how well the company is able to make money from people using Facebook who are on the move. It roughly doubled in the last quarter. Can Facebook maintain that momentum? From New York, here's Samira Hussein.
Mark Zuckerberg and his legions of friends were all smiles taking his social networking site public. But 1 year later, a lot has changed.
So how we're all sharing is changing.
Increasingly, more and more people are using Facebook on one of these. You know, a year ago, Facebook had very little advertising coming from mobile devices. Now it accounts for almost a quarter of its revenues. But the company is facing some stiff competition for those dollars.
Google is the elephant in the room. It's the big player. Google accounts for about 50% or more of the mobile ad market in the US and about a comparable percentage worldwide. So over half of all dollars spent on mobile advertising are going straight into Google's pocket.
Unlike Google, Facebook has a good idea of what its users like and dislike. That means highly targeted ads, something online marketers love. Although mobile ads generate less money, they are the key to Facebook's future. But Facebook is also competing for those highly sought-after younger users. The worry is they may be losing interest.
When you look at Facebook, they've been around for a long time now compared to some companies that you look at, like Instagram or Snapchat. What's going to be cool is always what's going to be new. And it's really important that Facebook thinks about what its users are trying to do and adapting itself to do that. So they've been copying a lot of messaging apps over the last year, trying to make their messaging product as relevant as possible to young people.
Fading from a year ago, the hype. Facebook is now answerable to investors. Remaining both popular and lucrative is a tight balancing act for just about any friend. Samira Hussain, BBC News, New York.
It's the news we didn't want to hear from China. Its manufacturing sector, the backbone of its economy, continues to slow. Let's go to Mariko Oy, who's at our Asia Business Hub for us today in Singapore. Nice to see you, Mariko. Fill us in on this data. It's for the month of April. What did it say?
That's right, Sally. We got the official Purchasing Managers Index out earlier this morning. It fell to 50.6 in April from 50.9 in March. What does it mean? A reading above 50 does indicate that the manufacturing sector has still expanded, but nevertheless, economists have been expecting slightly stronger figures than this. And as a result, the Chinese market is closed for public holiday, but other Asian markets which are open have been trading lower because of this disappointing figure, especially because it follows growth figures which came in weaker than expected for the first 3 months of this year. The Chinese economy expanded by just under 8% after, of course, growing by double digits for many years until this recent slowdown kicked in. But today's figures really show that demand for Chinese products remains quite weak, especially in the United States and Europe. As we've been reporting, the authorities there have been trying to rebalance the economy by relying less on manufacturing and exports by boosting domestic consumption. But as the new leadership tries to curb lavish official spending, that's a tricky task for the government as well.
All right, thank you very much, Mariko, and we'll look at the market numbers in a second so that you can see how they are trading in the light of that news from China. Other business stories: the Congress in Mexico has approved a major reform of the country's telecommunications industry, a move that could challenge the business empire of the world's richest man, Carlos Slim. The shake-up aims to improve competition in a market currently dominated by Mr. Slim's América Móvil and Latin America's biggest television network, Televisa. It's an unusual Kodak moment. Eastman Kodak says it's expecting to emerge from bankruptcy as soon as July as the commercial imaging business, which is under the control of its creditors. The photography pioneer launched its first camera in 1888. It grew to dominate the market for photographic film for many decades, but it was too late to adapt to the digital age, and sales plummeted in recent years, leading to its bankruptcy in January 2012. So the markets today have an awful lot to digest. We've talked about China and the manufacturing sector. You can see Japan down by 0.4%, Hong Kong trading today, South Korea, but as Mariko mentioned, no action in Shanghai due to a public holiday. Japan is really feeling the issue, the problem with the strength of the yen. Believe it or not, that is a relatively strong yen these days. So exporters are feeling the hit as a consequence. Also some profit taking. There's been quite a rally for Asian stocks, so maybe a bit of profit taking going on. This was the close in the US. Of course, as I've mentioned, a lot of attention on Facebook later stateside. I'll see you soon for a look at the papers.